Post Live, and here is John with Crypto Patterns and David, the 30-year trading expert. Now, as you guys have seen, our previous trade that we were talking about, BTC, how it's gonna go up and retest. It's pretty much it's a standing point, right? Is that how you call it, guys? Now, we were very much correct, and we want to go over what we said the last time and show you guys a brand new trade in which we're looking to make today, right?
That's correct. You want me to take it from here?
Yeah. How do you call those that line? It's not a standing line. I totally give it a wrong name. What's it called?
This is a got to get slipping my mind. This is the neckline. The neckline of the inverse head and shoulders pattern that we showed. And then that's the breakout, if that's the word you're looking for.
Okay, so yeah, there you go. Some new words in my vocabulary as well. And so you were very much correct about it moving up, around the $600, and right now it's right back at the same spot, kind of testing, its strengths if it's gonna go back up. And you're saying, as you said in the previous video, that it's gonna go right back up. It's just a retest of the support, right?
That's right. So, a little bit of background just to get us set up for today. I'm a 10-year trading professional that I've tried to earn money trading, equities and commodities and everything over 10 years. It's very different than doing it full-time for a living for 30 years like David has. And we each develop our own ways of approaching things. We want you to know both of them so you can make great decisions. Why I tell you that is because a lot of my trading background has been understanding what patterns mean in terms of market behavior. And we saw this with the trade. I was able to tell you almost to the letter what was going to happen on this Bitcoin trade because of knowing behavior at a breakout level. So when you see a breakout, which we did from the 8,400 on Bitcoin, and it shot up to over $9,000, everybody's watching the same charts. And it's like, oh, great, Bitcoin's going to go to 10,000. Let's all get in. Well, the powers that be, and that's what I was leading to, is I view trading as us versus them. There's this big pool of whales and hedge funds, and they're going to take our money. That's their only goal in life, is how to make money off us, because they have all the information and all the resources, and we're just little guys trying to figure things out. So when they see everybody chasing, that's when they make sure they make it look like it's going to fail. And that's how patterns play out. David would have a completely different explanation with the exact same result. You're going to see a retest of the breakout, and that's exactly where we are right now. Bitcoin's price is hovering right at about 8,400, but for an everyday trader, it's good to think, what are the other guys out there thinking? What are the big money people out there thinking? They're thinking, we want to take Bitcoin higher, but we don't want you in the trade. And that's where a retest comes into play. Now, to think, oh, okay, retest and I'm guaranteed to make money, that's not the way to think about it either. They'll see how many people drop out on the retest, and then they usually will take it higher. That's what the probabilities say. If everybody's hanging in there, they're going to drop it as low as they need to drop it to make money. They'll just start shorting. They can do whatever they want anytime they want, and we want traders to understand that that's how you stay safe, by knowing the patterns and by reacting to things that are consistently showing up more often than not. So that's a little background to get. I'm sorry, go ahead.
It's just like a game of chess where you have to follow their moves so you know what the next move is and should be, right?
That is perfect. That's exactly the way I look at it. It's exactly the way the charts operate. And when David and I are reviewing charts and discussing, we're like, well, what do we think they're doing next? It's exactly the way it operates. And you do want to be thinking a move, 2 moves, 3 moves ahead to make the best trading decisions. But the most important thing is your opponent can do whatever they want whenever they want. And too many traders get burned by thinking, I'm getting in, I'm staying in, I don't care what I see. That's where you run into problems. So that's where patterns can be so valuable, and where David's input is far more valuable than mine. He's seen years and years of additional setups, and he can keep you safe without, in a new market like crypto, he knows the games that are played. So David, why don't you jump in and talk about how to manage this trade from here? Because we've seen a big gain. Maybe you took some off, maybe you didn't. Now you're back where you started. Do we bail? Do we add? What do we do here?
Yeah, thanks, John. Well, first of all, I would say that the way you drew the pattern yesterday is, like you said, it's almost exactly what happened. We did get the breakout. We were waiting, if you remember, waiting for the breakout above 8,400. We got that breakout and got up about 500 points or so. As you see on the left side, we were risking about 1,000 to 1,200 points, and our target was up over 10,000 initially. We did talk about taken some off as it got closer to 10,000 because of the psychology of big numbers. We just got over a little over 9,000, so we didn't take any off the table last night on that move up. What we did do is we moved our stop up from below the inverse head down there at 7,200 to the neckline, which is closer to 7,800 or so.
The right shoulder. We decided on the right shoulder.
Yeah, I'm sorry. Yeah, the right shoulder, not the neckline. So we moved that up about 400 to 600 points, further reducing what our risk is on this. And now it's it's kind of a game, if we're picking, what level is a stop, because we're trying to get a balance, like you said there, John. That retest, it very predictably, they took it a little bit under 8,400. What they're looking for there is for people who bought the breakout and who immediately put stops on at their entry. Okay, if you bought at 8,400, you're going to say, I'm not getting, and it goes up. I don't want to lose anything on this. I'm going to put a stop at 8,400. So if somebody wants to take this market up, they want to flush you out first. And they do that by running stops, what's called running stops. They'll get it to a big number. They'll get it to a key support or resistance number and try and get, the smaller players who have put stops in at the key psychological numbers to get out. And like you just mentioned, John, they may take it below 8,400. They may take it to 8,200. They could take it to 8,000, that psychological number at 8,000, to really try and flush out people who bought 8,400s. So we're going to try and find that balance between, not getting head faked and not getting run over, because there's a possibility that they take it below 7,800, all the way down to our original stop and further down. We don't want to just blindly say, they're taking it down, but we're going to go up. We broke 8,400. We're going to this 10 too. We're still going to have stop losses put. We just want to raise ours and, again, try and find that balance to not getting run over, but not getting head faked. If we put the stop up at 8,400, we're out on our trade. It traded below, we're out. Now it's back above, and we're wondering, hey, are we going to keep buying above 8,400 and selling as we get below it? That obviously isn't a way to make money. So kind of long-winded there, but what we, to recap, what we did is we raised our stop. We didn't do anything with the target. Our targets are still the same. Our actions will still be the same as we approach 10,000, but we're going to stop ourselves out here in the 7,800 range now and reduce our the amount that we have at risk to 600 points in total.
I want to do a little plug for our educational class, because David has shown me a number of ways, and if you've been watching price action today, currently, you can just see the prices going a little above 8,400, a little below 8,400. And we've got methods to show you how to track that, how to determine these key levels, and how to make sure you're on target. So don't have time in these daily updates to share that, but believe me, there's a lot to it, and you'll want to be aware of it. Any other comments, Nicholas? I'm going to move on.
I was going to say that I learned just a lot just by you guys covering. Even if since you guys were successful, in the predicting the moves of the market, you guys, even if everything is playing out as you want it to be, you wouldn't don't have to alter your position too much if you're correct. You just minimize your risk and move that stop loss up a bit, and that's the perfect way to play it. So I like how you guys are following the market and constantly readjusting your moves a tiny bit. So that's an excellent thing to take away from this, because it's not just about having it's not a one-shot game. It's about
absolutely, Nicholas. And I think another way to say that is I'm sorry if I was talking over you there, John. What's important is there's two parts to this, and one is getting better at pattern recognition, and that's something that we can all do, and it takes experience, and that's half of the game. The other half of the game is money management. It's much easier, frankly, to learn money management and the proper things to do. It's tough to do, though. It's tough to constantly stay on it and remove your emotion and follow what you're trying.
Exactly. Now, you guys should definitely follow us for next episode. This one is very long. I think I already learned a lot from this one as well. So we'll do next update with a brand new market we're looking to trade at and what we're gonna do. So I'll see you guys in the next one. And thanks, John, and thanks, David.